All right, so you've been sending over like a ton of articles about dividend investing lately.
Headlines shouting, dividends are
Yeah.
back, and
Yeah.
the unexpected powerhouse, something like that.
Mm-hmm.
What's got you so excited about dividends all of a sudden?
Well, you're definitely picking up on something. There's a lot of buzz about dividends these days, and for
Yeah.
good reason, but let's dig a little deeper, Go
Yeah,
beyond just those nice to have checks. Let's
exactly.
get into it.
Yeah,
Especially because I saw this stat.
that 85% of S&P 500 returns since 1960
Mm-hmm.
can be credited to reinvested dividends.
85%.
It's huge.
It's massive. It's like the secret ingredient that no
Well,
one's really talking
it's
about.
a magic of compounding
Yeah.
when you reinvest those dividends over time.
It's like, imagine a snowball.
Yeah.
Rolling down a hill, it just keeps getting bigger and bigger.
Hmm.
That's your money growing with dividends.
But here's the thing, that 85%,
Yeah.
it's not like a constant
Yeah.
across every single market cycle.
All right.
Think of it like this. Some decades, the market's smooth.
Oh,
If you're cruising uphill, no problem.
easy street.
Exactly.
Other times, it's bumpy.
Right.
It's like you're off-roading.
Okay, so how does that off-roading affect dividends?
So when the market gets rough, that's when that dividend reinvesting, it really shines.
Okay.
Let's look at the 1940s, the 60s, the 70s, times when the market returns weren't exactly stellar,
Mm-hmm.
but dividends, they made up a much bigger chunk of that
Right.
total return.
They were like shock absorbers, cushioning the blow.
Uh-huh. So that's why we're hearing so much about it now,
Right.
because things have been, to say the least, a little turbulent.
Exactly.
So it's like they're that steady, reliable
Yeah.
presence during those uncertain times.
know.
But then I've also heard
Always chasing the highest yield.
isn't always the best approach. Is
Yeah.
there any truth to that?
You're already thinking like a seasoned investor here.
You're spot on.
Okay.
Chasing those sky-high yields, it can be tempting,
Oh, yeah.
right? But it's crucial to understand what's behind them.
Okay.
And to do that, we need to talk about something called the payout ratio.
All right. Payout ratio, hit me.
Imagine, like, you own a lemonade stand.
Okay, yeah.
Right. You're making tons of money. You're raking it in.
Cashing in.
Yeah.
Are you spending every single penny on, like, candy and video games?
Or are you saving some? To buy a bigger stand, expand your business.
So it's about finding that balance between spending and, like, reinvesting.
Exactly.
The payout ratio is that percentage of profits that a company pays out as dividends.
Okay.
You want a company that can share its profits with you as the investor, right? But without sacrificing future growth.
So if a company is giving out, like, almost all of its earnings as dividends, that's a red flag.
Precisely. That's like the lemonade stand blowing all its cash on candy.
Sure, it's fun now.
Yeah.
But what happens when it's time to grow?
And this is where it gets interesting. There's this study by Wellington Management.
The one I sent you.
Yeah.
About how aiming for the highest yield can actually backfire.
Exactly.
It seemed counterintuitive.
It is. But this study looked at dividend payers over 9 decades.
Wow.
Not just a few years, 9 decades of data.
Okay.
And guess what?
What?
It was the companies with moderately high yields.
Okay.
The ones who found that sweet spot
Okay.
between paying dividends and reinvesting for growth, they consistently outperformed.
Okay, I'm hooked. Tell me more about this sweet spot.
Okay, so picture this, a graph
Okay.
with companies lined up from the lowest dividend yield
Okay.
to the highest.
Okay.
Now, split those companies up into 5 equal groups.
Okay.
Each one is a quintile.
Okay.
The lowest yielders are in that first quintile. The highest are in the 5th.
So the 5th quintile is like where all those...
Super high yields are.
Exactly.
No.
But here's the thing.
Okay.
The study found that it was the 2nd quintile. Okay.
The ones with those moderately high yields,
Okay.
they consistently outperformed. It's
Interesting.
like Goldilocks.
Okay.
Those highest yields, yeah, they seem great, but they're often unsustainable, too hot.
So they can't keep those massive payouts up forever.
Right, and eventually
Yeah.
something's got to give, and a lot of times they're forced to cut their dividends.
And that's bad.
Investors get spooked,
Makes sense.
share prices plummet,
Yeah.
suddenly that high yield isn't looking so hot anymore.
Ouch. So it's not about just chasing the biggest payout today.
Right.
It's about finding those companies that have that history
Yeah.
of steady growth, right?
Exactly.
It's like they're giving you a taste of the profits,
Mm-hmm.
but they're also reinvesting.
Yeah.
So the lemonade stand can keep expanding.
Yeah, you're getting it.
That's why you see so much buzz about these dividend growers.
Okay.
They've got that track record of increasing their dividends
Yeah.
year after year.
Mm-hmm. 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 Yeah.
Signals confidence, you know?
That future earnings power.
Okay.
They're committed to sharing those profits.
And that brings us to the Ned Davis research, where they
Yeah.
broke it down, right?
Yeah.
By those dividend policies.
Yeah.
And there was a clear winner.
There was.
Spoiler alert, the growers.
Dividend growers.
Dividend growers, okay.
They delivered those higher returns.
Yeah.
And they had less volatility.
Which is good.
Which is good.
Less of a roller coaster.
Less of a roller coaster.
Okay.
Their share prices were more stable.
Smooth sailing.
Exactly. Smooth sailing.
Okay, so why?
Why are they having a moment now?
That's the million-dollar question.
No crystal ball, right.
Right.
But 3 major trends
Okay.
that are converging.
Okay, let's hear it.
That are making these dividend growers really attractive.
Okay.
First up, cash is king.
Okay.
Corporate balance sheets, they are overflowing with cash right now.
Oh, yeah, they've got money to burn.
They do. Some are using it to expand operations. But in times like these, a little uncertainty.
Dividends start looking pretty good.
Right. It's a way to reward investors,
Mm-hmm.
signal confidence.
Okay, cash-rich companies. Check.
Good trend.
The bond blues.
The what?
The bond blues, bond yields.
Oh.
They've been historically low.
Even with all the increases lately.
Even with all the increases,
Okay.
it makes those higher-yielding assets, like dividend-paying stocks, way more attractive.
So are you saying that there are dividend stocks out there?
That are yielding more than bonds.
You'd be surprised.
Really?
A surprising number of companies, S&P 500 companies,
Wow.
offering higher yields than the 10-year Treasury note.
Okay, so we've got cash flush companies.
Low bond yields. What's the third trend?
The big money is moving in institutional investors,
Oh, thanks.
like pension funds, endowments, the big guys.
Right.
They've been pouring money into dividend strategies.
So it's not just like individual investors like me
Right.
who are thinking this.
It's not just you.
It's the big dogs too.
It's the big dogs.
So this is like a big deal.
Yeah.
Okay.
This has been very U.S.-centric, though.
Well, yeah. Is it just a U.S. thing?
That's a great question.
It's easy to get tunnel vision.
Yeah.
But the world of dividends,
Yeah.
it's much bigger than that.
So, like, what other opportunities are out there?
Well, think about it. Emerging markets are growing.
Yeah.
Some countries have these aging populations, right? Is creating this whole new set of needs for investors.
So those same forces we see here, they're playing out globally.
Totally, yeah.
So I shouldn't limit myself to just U.S. companies.
It's a diversification play.
This has been really interesting.
I feel like I've gone from dividends, okay, those quarterly checks,
Right.
to like understanding how they can be almost strategic,
Yeah, absolutely.
especially with what's going on in the market right now.
It's about recognizing the bigger picture, for sure.
Any final words of wisdom?
Yeah, as you look at these companies,
Okay.
whether they're U.S.-based or international, don't just chase those yields, okay?
Okay.
Dig a little deeper.
Right.
Look at their long-term prospects. How are they adapting?
Okay.
But most importantly, how does it all fit into your goal?
Your personal goals.
Exactly,
Yeah.
and your risk tolerance.
Well, we've reached the surface on this dividend deep dive.
But as we learned, tons to explore.
Oh, yeah?
And, of course, everyone, this isn't financial advice.
Always important to say that.
Do your own research. Talk to a professional.
Make the decisions that are right for you.
Yes.
Until next time.